You've been working your butt off all your life, and finally you've copped yourself $1,000. You're asking yourself, what should you do with that money? Should I buy something fancy with it? Should I invest it? Let me ask you something. If you were hiking around the block and you saw a bear, would you take a selfie with it? Would you whip out your phone, take a shot and run away? Or would you get closer and closer? Your answer will help me help you figure out what you should do with your $1,000. Coming up. Okay, so what does a bear selfie have anything to do with personal finance other than inducting you into the Tinder bear selfie too much cojones club? It's in fact a way to figure out, a fun way to figure out, how risk averse you are. How much are you willing to take risk to get reward? And so based on this strategy, you can figure out, from a scale where you stand and how you should invest your money. If you're looking to do something, buy something fancy with that money, there are plenty of other YouTube channels that you can use. With this YouTube channel, you can kind of figure out where you stand personally, how you look at personal finance, and also perhaps find a way to invest your money in a more interesting way. Okay, so now that you know why, I want you to pause the video and think about your answer about the bear selfie, and then figure out from a scale of 1 to 5, where do you think you stand in terms of how much risk you're willing to take? Once you've done that, I want you to think about what $1,000 means to you in relation to how much money you have total. So that will be your risk multiplier. If you have less than $3,000 in your bank account, then your multiplier is 0. If your bank account is made up of less than $10,000, your multiplier is 1. If you have more than $50,000, then your multiplier is 2. And then lastly, if you have more than $100,000, your multiplier is 3. This essentially gives you an additional benchmark relative to where you are in life, because it's super important to know how big your bankroll is in order for you to figure out how to invest $1,000, $10,000, etc., etc. The end result will put you on a scale of 0 to more than 10. Functionally speaking, for this particular exercise, you'll fall in the same group if you fall on the scale of 7 and above. Okay, level 0. What does that mean? First of all, level 0 means that I'm an engineer and I count from 0 instead of counting from 1. Secondly, level 0 basically means that you're either super afraid of risk, so much so that it'll make you cry if you lost $1,000, or that you have less than $3,000. I highly recommend that you do not do any investments when you have less than $3,000 because your bankroll is way too small. If you lost just 20-30% of that money, it can hurt you really badly, right? You need that flexibility and the liquidity of having that money. So all I recommend for you at level 0 is put it in a savings account. Me personally, back in those days when I made my first $1,000, I tried to invest as quickly as possible, and it was painful. Like, I basically lost most of it, and it hurt me so personally. Even though I love risk, I don't wish that upon you, basically, right? So that's the advice I would give you. If you have more than $3,000, and if you are okay with a little bit more risk, now you're in the level 1 territory. And for level 1, you're basically on a scale number of 1 to 3. In this case, what I recommend you is to put your money in a CD. A CD essentially is an account where you put your money into like a bank account that's categorized as a CD account, where your money will be locked up for at least a year. And based on the amount of time that is locked up, you'll be guaranteed a certain amount of return. A CD's return is about 1.5%, which effectively means that it's 30% higher than if you were to put your money in a savings account. And so you'll be guaranteed the gain. The gain will be guaranteed higher than just putting in a savings account. And you'll have that flexibility because you have, more than $3,000. So you can have $1,000 locked up and making you money. Level 2 is where it gets a little bit more interesting. Basically means that you fall between the risk profile of 0.3 and 6, and that you essentially understand risk a little bit more, that it will have ups and down swings, but also you have enough money where, like it won't hurt you that badly if you lost the money. You can wait for the economy, for example, to recover if the stock tanked, as another example. And because we're only talking about $1,000 here, it actually, I wouldn't recommend you do anything other than invest in stocks, because it's not enough for you to do other more interesting things with it. So in this case, I recommend that you invest in the S&P 500 or some ETF or mutual fund that's similar to the S&P 500. Historically speaking, the S&P 500 has given about a 9 to 10% return every single year for the last 90 years. And I highly recommend this for you guys instead of the previous levels of risk profiles, because, depending on how crappy your president is, or, when it's just the economic downturn, you might lose 20-30% for 5 years, right? And that'll matter a lot if you are scared of risk or if you don't have much money. But eventually it will come up, right? And so if you fall into this risk profile, that's what I recommend you invest your money in. The last level is level 3. In this case, since we're only talking about $1,000, level 3 will encompass anybody who has a point of 7 and up. So in this category, I think is the most interesting because I fall into that category as well. I want to invest super aggressively for that $1,000. I'm also looking in an approach where I want to see some sort of return, a reasonable return between 30 to 90 days, right? So that basically means instead of long-term investments like S&P 500, I'm doing swing trading, or I'm betting on earnings, or I'm betting on, like, even more interesting, the FDA approval, right? So in that case, I would look for stocks that fall into those categories where I'm expecting something major to happen in a 30 to 90 day period, either because I think the economy is going to turn around and that's going to affect the stock a certain way, or a pharma company is going to be getting an FDA approval and the stock's going to turn around a certain way, or that's pretty much it. Or the earnings is about to come out, and that might influence the stock in a very positive way or negative way, depending on how you invest, right? So that's what I would do with $1,000 if I fall into the level 3 category. When I had my first $1,000 outside of my original saving of $3,000, so $4,000 basically, how I looked at it was that I saw pharma companies had the biggest potential because usually they've been around for years, right? Because the amount of research and the money they've raised, they've already been around for years. And so what I recommend you guys doing, if this is the kind of strategy that you want to play with, is to Google pharma companies FDA approval coming up. And you'll get a list of pharmas that fall into that category in a 30 to 90 day zone. And you can figure out, which company is producing a product that interests you, has the highest growth potential, and also accommodates a lot of the consumers, and also accommodates as many consumers as possible. So the more applicable this drug is to a lot of consumers, the more likely that this drug will succeed, and more likely that insurance will pick it up, etc., right? And if those fall into a criteria, the stock can easily make you 30-40% or even double, triple, right? And that's what I would do if I have a high risk profile and I have $1,000 that I want to invest in. Okay, I hope you found the content useful. It's a strategy I've developed for myself, and I use it extensively every single day. And of course, your risk profile actually changes as you invest more money, depending on how you look at the economy. depending on your family situation, whether you're having children, your risk profile will change, etc., etc. If you like this content, please hit like and subscribe, and I look forward to working with you next time.